Right, we are launching our Diwali special Samvat 2071 with perhaps the best and brightest from the markets. Madhu Kela of Reliance Funds joins in, Reliance Capital joins in. Madhu, thank you very much. Thank you very much for kicking off our Samvat celebrations.
Thank you very much.
Well, actually, the day also seems very auspicious. We have got a mix of very good global cues and very good domestic cues. But, let me introduce a note of caution.
Sure.
Do you think this good bonhomie lasts? Are we going to once again see a new high before 2014 is out itself? Or do you think now for the remaining quarter you would be a little cautious?
Yeah, I would say, Lata, that is that's a message which I want to communicate, that, we are trying very, very hard to say where the markets are going to be in the next 2 months. While history has proven the returns are never being made in order to ascertain or understand where the markets are going to be in the next 1 quarter or 2 quarters. And I know so many people who are feeling really left out after such a big run which has happened in the markets, and now they are saying that, God, give me a little correction so at least I can be inside this great India story which is going on. So I think if you have a 3-month view, I don't know where the markets are going to be, but if you have a 3-year perspective, and equities is all about that perspective, then I'm sure picture abhi baki hai.
Of course, picture abhi baki hai. That's well put. But what is that 3-year picture? I mean, do you have a view of, say, 20% compounded earnings growth, which one brokerage spoke about earlier today, this morning? Therefore, what does that mean for the Sensex or for the Nifty? In 3 years, what are we looking at in terms of compounded gains?
So let's go one by one. I think here, first is, as in any investor, when you are investing, you have to look at what your comparative returns are, So I am very confident that over the next 3 years, equities will outperform real estate, gold, silver, and fixed income. Now that return outperformance, whether it is of 5% or 7% or 10%, I don't know that. Second, I think earning growth is likely to surprise many people over the next 2-3 year time frame. Again, right now, even consensus still is building somewhere around 15% earning growth, even for next 3 years. But you look at, all the policy making, as we saw yesterday was a big bang day for policy making. Once all this policy making comes together and give this year for that consolidation, I wouldn't be surprised if earning growth for the next 3 years after this year is even upward of 20%. Because we have had muted capex cycle, so the capacities have not been added significantly. And if the economy again starts to grow at 7-8%, then I think you could have earning growth of upward of 20%. That clearly not been priced by the markets as yet. Third, and the most important thing for outperformance of equity, जिसके घर में देखो सबके पास रियल एस्टेट तो है, सबके पास गोल्ड है, सबके पास फिक्स्ड इनकम है,
लेकिन
equity किसके घर में है, that you have to go and see. Even most sophisticated people in the market who've been wanting to take risk, their weightage is also very small. Let me just give you some numbers basically. We did some back up the envelope calculation that if 3% of the overall saving gets allocated into equity over the next 3 years, and if we cover up for the last 3 years, the equity flows upward of 2.5 lakh crores can come in the markets in the next 3 years. Now, I don't know whether that number is going to be 3% or 2%, but it is clearly indicating the last 3 months, the flows which we have got, even in mutual fund, that people are now finally realigning and realizing that they need to put some weight of equity in their portfolio.
No, I completely agree with you. I mean, if you looked at the mutual fund portfolio itself, from what around layman times, you were at 7.5-8 lakh crore. We are at 10 lakh crore. If you adjust it to nominal inflation, we are actually contracted as the pool of.
I told you 80,000-90,000 crore rupees of outflow has happened in last 3 years from mutual fund and insurance companies. It's an estimated number.
Yes. But and even if you make good that and come back to the 2006.
Normal 3%. We are not even assuming what is going on in America and in Europe, wherein the equities weightage is as high as 30, 40, 50%. We are only assuming 3% weight of equity in people's portfolio.
Okay. Before I come to which sectors you see doing very well. One more point on the macros. The numbers and the performance of companies is not still giving you any
that's
hope.
Right. That's right.
I mean, we are still living in hope.
Yeah.
If you look at the IIP numbers, even if you correct them to some one-offs, it still is like 1 or 2%. And what is worse, we spoke to Rajiv Bajaj after his second quarter numbers about the festival sales. Very tepid, very cold is how he put it.
Sure.
When do you see that turn coming? Is it by end of 2014? Is it only in FY16?
Yeah. See, that point I take is a very well taken point, that the fundamental reflection on the ground is not yet there. But we have to understand that, we are coming out of a 3-4 year absolute challenging times. That, not only there were the policy challenges within India, but there was even the external environment, what happened after Lehman Brothers, to a risk of trade generally. So I think these things will take a little bit time to correct. But I am sure, the correction will also happen because of the markets. See, companies, once the markets become good, let's say you are at 8,000 Nifty, only because of your 8,000 Nifty, a lot of these banks which needs to get recapitalized will be able to capitalize. Yes. And we will get into virtuous cycle, wherein people will be able to raise money, restructure their balance sheet, and then earning kickoff will happen. So I think that might be maybe even 6 months. I would not argue that if there is another 6 months for real ground situation to improve, there is a possibility. But what we have seen, early indication of improvement. Let's say even see the list of stuck-up projects which are being stuck for a very long period. Now that number has come down. See that now reshuffle finally we are seeing, even in the bureaucracy. So I am quite hopeful that 6 months down the line you will start to see the momentum in the real fundamental. Having said that, will the market wait for these 6 months, or it will give you a small chance, small correction, it will coincide with global? That is entirely possible. But typically when you are starting a big bull market, and this I think is that real big bull market. You see, last time when we made the bottom, that was at 51, 5200 Nifty in August of last year, and we are in October. There have been many reasons to worry in between. There has been ISI, there is ISIS, there has been Iraq, there has been local scare whether Mr. Modi will come, he will not come. There have been many, even state election, blah, blah. A lot of things have been there. But markets have not even corrected 10%, even once, from their highs with them. Now this is the typical sign of a bull market, wherein there are going to be plenty of worries, and non-performance in the short term is one such big worry that numbers are not yet reflective. But this is the nature of bull market.
So it is smelling for you like the 2003 September moment or the 1991 moment? You have seen both those phases.
Yeah. I think it's not as compelling, to be honest with you, because in those times, the valuations was really by your side. Markets were undiscovered. You could buy so many companies at 3, 4, 5, 6 P multiple. So markets are not as cheap or as compelling as they used to be in 2003-4. But in some sectors, in some companies, I don't rule out, the kind of returns which were being made in that phases. Whether that will get repeated is possible, yes.
That's where I'm coming to. So if you're searching for beta, exactly where will that come? Would you at this point in time rather have a portfolio that is heavily tilted in favor of cyclicals, public sector banks? Would you go that far?
So I would say that, when we used to invest between 2003 and 2008, a lot of our effort had gone into alpha generation, and we really betted on a lot of stock ideas, individual companies. Having said that, what we've realized over the next 10 years, that it pays to have a balanced portfolio. Okay. You never know, what thing will run when. Like, people have been very skeptical about pharmaceutical, that valuations have been high, but that sector continues to do well. So now we have a portfolio approach, wherein what we're trying to do, that you have 70-80% of your portfolio. If that can be aligned, and that portfolio is aligned to where the market is, and balanced 20-30% you are trying to do alpha and beta generation, whatever you call it.
Okay.
So that works really well. So the people, just because IT is not performing last 2 weeks, it doesn't make sense to just throw away everything which you have in IT. Or just because pharmaceutical has been stagnant for last 2 weeks, it doesn't make sense. So you will still have to have that balanced portfolio of well-run companies which have visibility of 15-20% growth over the next 3-4 years. Corporate governance standards are very, very high. So that will still comprise a large portion of the portfolio. But we will still look for a lot of beta bets from sectors which may not have done well, in the last 3-4 years. All the economy-related sectors, all the sectors which were very, very which had a huge impact of interest rate and inflation and all these macro worries. I think you will find some winners, and let me repeat, some winners from those sectors, and that is what our challenge is to really pinpoint those winners from these sectors.
Okay, and therefore, would those winners lie, for instance, in the financial space? Would you rather still go with the tried and tested private sector banks, or do you think since the economy is on the turn over the next 3 years, it would be good to have a lot of public sector banks as well?
I wouldn't say a lot of public sector banks because they have their own challenges. There is still the NPL issues, which is staggering, very large. And a lot of core industry, as you rightly said yourself, is not yet revived. And some balance sheets which have gone disproportionately bad, over the last 4-5 years is unlikely to see revival in a hurry. So that will continue to... But one would not close its mind. So because there is a lot of offering which is coming in the public sector banks, if in a very large bank, if some opportunity really gets created, one will not be close to looking at it just because of all these worries which are there. Because only when the times are bad, when the worries are there, then only you get to participate in the market and make that extra return.
In early September, when we just crossed that 8,000 and we were getting used to that new level in the Nifty, there was obviously an outperformance that came from the mid-caps.
Sure.
And there were people who were talking about 20,000 on the mid-cap index.
Sure.
Even as the Nifty goes to 9,000 or 10,000.
Sure.
What's your sense? From now to the next 24 months, would mid-caps give you that big cream on the coffee?
So, I would say that, Lata, if you see the character of this market till now, if we assume that last 1.5 years we are in a real new bull market, there are 2 or 3 things which are very visible. A, there is much bigger return which is being made in the broad market than in indices.
Yes.
There are so many companies which are up 100, 200, 300, 400%, even in last 1 year. Good quality companies. And I'm not talking of very, very small companies.
Oh, yes, auto ancillaries, I mean.
Yeah. And you can find them you can find them in pharma, you can find them in IT, you can find there are some even infrastructure related companies which are up like 4-5 times from the bottom. So that is clear that the broader market will have a larger strength as compared with Nifty, and that is where the role of mutual fund managers and the mutual fund comes in, that we will strive to make that extra return which is not there in the indices. Second, I think in this market, quality is playing a big role. So, wherever there is a little bit of suspicion, market is not wanting to reward those companies. Wherever there is a comfort, you see valuations have gone disproportionately higher as compared with peer. And you can find these examples. I would not like to take names. Even in best performing sectors, even in cement you can find them, even in pharmaceutical you can find them, even in technology you can find them, auto ancillary you can find them. That there are companies within the same sector have not done well, and there are other companies which have done really well. So I would say there still will be broader opportunities. Again, if you have a 3-5 year perspective, in the short term, mid-cap and small caps looks a little stretched because of the run which we have had. But if you have a 3-5 year investing view, you will still find a lot of gems in that.
So even in the already discovered gems in the mid-cap space, in the auto ancillary space, for instance, like the Bharat Forges and the Motherson Sumis, you think that the valuations may look high now, but it is still good to persist.
It is still good to persist some companies on a portfolio
allocation basis. Okay, let me come to the reforms part that you spoke. First up, do you think that the government has wasted a bit too much time and has not taken advantage of the good run of the markets for divestment? Will we still complete the divestment, do you think? The target is about 55,000 crores.
I think, again, out here, you and I are in a hurry.
Yes,
that
yes,
we are
that
in the
I
market,
agree. We watch the market every minute.
But Mr. Modi need not be in a hurry. That he is here for 5 years,
yes.
And hopefully
another
even after
5
that.
years.
So I think they are going in a very systematic manner. In fact, in one of the newspaper, I made a comment. If the patient is in ICU, you can't give him a steroid and tell him to run. So considering the situation we were in India for the last 5 years, I think they had to first diagnose what is the nature of the problem, what is the extent of the problem. They were aware of it. And I think it's my belief and conviction that they will surpass even your and my expectations in the next 5 years.
I do hope, yes.
I don't think that, again, I am viewing it for last 6 months. Like what they did, if this is achieved, the fuel reform.
Diesel and gas.
And I'm not saying even diesel. Diesel was anyway expected. What they've done for gas cylinders, if they are actually able to implement that by March, this is a permanent fixing of problem, and this will generate roughly 2 lakh crore rupees of extra liquidity for the system as a whole. This money which was getting into pilferage,
the wrong hands.
So I would say that systematically, decisively, we are seeing the policy action. I hope it will get accelerated, because now we are again talking, we'll start to talk of the next budget after a month or two.
Yes.
So I think next 6 months, we should see a lot more action than what we have seen in the last 6 months. But I'm not disappointed. I think the series of action which one is anticipating, it is in the right direction, and it will come.
Okay, Madhu, actually you're giving me a very nice cue to the next set of questions I wanted to ask from you. Reforms. What are you expecting next from the government? You spoke about the budget a couple of times.
Yeah.
What will enthuse a person who is looking at Indian markets as lamba race ka ghoda? What do you want to hear in the next 6 months?
I am just saying, Lata, from my perspective, what they are doing, they're just basically the car has got stuck in the traffic. So just trying to remove the traffic so that we can run smoothly. So that must carry on. Second, there is a lot of money which has got stuck in the last couple of years.
Exactly.
Let's say in power sector, in the coal sector. I would like to see, some decisive steps from the government wherein that value gets unlocked. Those assets become operative. Because it is not in anyone's interest, neither in the interest of the promoters who have promoted this company, nor in the interest of the government, nor in the interest of banks. So I'm sure, some measures will happen that a lot of this value which has got stuck, and that number is as high as 5 to 7 lakh crores, which has got stuck in various projects. So if they can unlock that and have some policy perspective to ensure that these projects at least it starts to run, whether you make more money, less money, that will be from sector to sector and company to company. But I would like to see that unlocking. Then there are some obvious things like, the 49% in the insurance sector, and a series of things which were really expected of a government, what we have seen in the form of labor reform, which is just begun. So I would say that, unlocking of that value is, and whatever policy which is needed is what at least I would look and what the market is looking for.
Yeah, the market is actually even hoping that the land acquisition bills tweaking will be mooted in the winter session. Are you expecting something as dramatic as that?
I would say, again, I'm not trying to put a perspective that whether it happens in this winter session or next 6 months, but I am sure those things will also come. Even GST will get implemented, whatever changes that they have to do on DTC, then uncertainty on GAR. I think all that will get addressed over the next 6 months, slowly but decisively. There is one empirical evidence to go by, what was being done in Gujarat. So in Gujarat, always the big picture policy was being framed. It took time, but it was for one and all. It was not for one specific person or one specific group. I hope that is the same thing which will follow in the center, and that is what I said. They are diagnosing what they need to do, and I'm sure it will get done in due course of time.